Welcome to the deep dive. Our mission today, we're going to cut through the usual corporate noise. We've got Achr Aviation's Q3 2025 shareholder letter right here, and we're not just reading headlines. We want to figure out how they're actually building this air taxi future, like right now.
Exactly. And for you, the learner, the real goal here is to see how this whole advanced air mobility game, AAM, it's changing. It's really not just about the eVTOL aircraft anymore, is it? It's becoming this multi-front battle. We're talking capital, IP, actual real estate, and crucially, managing the digital airspace.
Okay, right. So let's unpack this. We've basically got three big chunks from the sources. First, the money and the patents, their foundation. Second, this frankly massive and kind of surprising move they made in Los Angeles with infrastructure. And third, how the actual plane is doing in tests and where they're expanding globally.
Yeah, and what's really fascinating, I think, is seeing the company kind of mature. They're moving beyond just making the aircraft. They seem to be aiming for owning the whole ecosystem, starting with, well, the ground itself, the physical places.
Okay, let's start right there with the foundation. Money and patents. They announced they raised $650 million in new equity capital in Q3. That's a lot of money. Reinforces that whole sector-leading balance sheet line they use.
It really does. And that $650 million, it pushes their total liquidity over the $2 billion mark, which is just huge. Specifically, the shareholder letter states they ended Q3 with $1,641.3 million in cash equivalents, and short-term investments. That's the war chest, right? That gives them the breathing room, the multi-year runway they absolutely need for certification and building stuff out. It's incredibly capital intensive.
Right, but they are spending too. Total operating expenses were, let's see, $174.8 million gap, or $121.2 million non-GAAP adjusted. Can you quickly unpack that difference for us? Why show both?
Sure. So GAAP, that's the standard accounting rules, the official picture. Non-GAAP adjusted, though, that usually pulls out things like stock-based compensation, maybe some one-off charges. By highlighting the lower non-GAAP number, they're basically signaling, look, our core operational spending, R&D, manufacturing, it's under control. It's where we expected it to be. It's a message to the market.
Got it. And speaking of spending, the adjusted EBITDA loss was $116.1 million, still a loss, but the net loss actually improved quite a bit, down $76.1 million from Q2. How does that work?
Well, that EBITDA loss shows they're still deep in that growth phase, spending heavily on getting certified and building things. That takes priority over profit right now. But the net loss improving, that tells you their massive cash pile is actually starting to earn significant interest income, which helps offset some of that operational burn. So yeah, the takeaway is financial stability. They're solid hitting to the really expensive phase.
Okay, shifting from cash to defensibility. Patents. They bought part of Lilium's patent portfolio. $21 million. Seems like a technical detail, but $21 million for a competitor's IP. What's the real strategy there?
Oh, it's definitely a strategic move, a power play, really. It bumps their own global portfolio up to over 1,000 assets. That's significant. But the question is, are they buying stuff they need, or are they buying insurance against future lawsuits? Probably a bit of both. They specifically got patents for things like ducted fans, high-voltage systems, flight controls, core eVTOL tech. So it protects them, yes, but it also positions them as a major IP holder. Down the line, others might need to license tech from them.
And that idea of dominance, maybe owning the ecosystem, it connects perfectly to this next bit, the $126 million cash deal to get control of Hawthorne Airport in LA. I mean, this feels like the headline story from the whole report, doesn't it?
I completely agree. This is pure strategy, logistics, real estate. It's brilliant, potentially, because this whole AAM thing, it's not just about flying. It's about where you land, how you connect. And Hawthorne, the location is just, well, unique. It's less than 3 miles from LAX. Think about that. It's the closest airport to LAX itself. Plus, it's right there for places like SoFi Stadium, the Forum, downtown LA, major traffic hubs.
That proximity is key. And the asset itself is substantial. 80 acres, a 5,000-foot runway, nearly 400,000 square feet of space. Hangars, offices.
But the airspace detail is maybe the cleverest part. Hawthorne is in Class D airspace. Now, for anyone tracking aviation, LAX is surrounded by this complex, restricted Class B airspace. Very hard to operate in. Class D is controlled, yes, but it's more local. By being in Class D but so close to LAX, they could potentially shuttle people to and from the international hub without getting tangled in the Class B complexities. They found the sweet spot, a physical bottleneck they can control.
Okay, but $126 million for a master lease on an airport. Is that overpaying just to get access?
That's the question, isn't it? It's a steep price. But think about scarcity in LA. You literally cannot build another airport in that spot. And the price probably makes more sense when you look at their plan for it, their whole vertical integration idea. They laid it out in two phases.
Right, let's run through those. Phase one is about sort of locking down the current value.
Exactly. Phase one, get the rest of the 30-year master lease. Okay, that's step one. But crucially, they plan to buy a 75% stake in the FBO. That's the fixed base operator. The FBO handles fueling, ground handling, passengers, maintenance, basically everything on the ground. By controlling the FBO, our trucker controls the whole passenger experience from the moment they land to the moment they leave the airport. No depending on third parties. Vertical integration.
Okay, that makes sense for operations.
Yeah.
But phase two, this is where it gets really futuristic. Using Hawthorne as a test bed for AI in aviation.
This is where my eyebrows really went up. It gets super interesting here. They're basically designing the template for the airport of the future on this site. Think AI managing air traffic and ground traffic. Smart runways packed with sensors, autonomous ground vehicles buzzing around, a digital apron managing different types of aircraft. This site isn't just an airport. It's going to be a data gold mine for figuring out how to manage these complex, high-volume eVTOL operations safely and efficiently.
Wow. So one of the priciest bits of land in Southern California just became the world's most advanced lag for EV tools. You mentioned Michael Leskinen from United Airlines. His quote really nailed it, didn't it? He said, "This isn't just about EV tools for Archer. It's about using AI to figure out how to move people better in congested cities everywhere." LA is the test case, but the goal is global congestion relief. Okay, but all this planning, the AI, the real estate, it all depends on the actual aircraft. Midnight, getting certified, and flying reliably. What's the latest on the flight testing front?
Yeah, can't forget the vehicle. And Midnight has been hitting some important milestones, stuff that maybe gets overshadowed by the big infrastructure news. We're seeing reports of flights going over 50 miles in range and reaching altitudes of 10,000 feet.
Let's break those down. 50 miles range. What does that mean commercially?
That 50-mile mark, that's kind of the magic number for key urban and suburban routes. Think connecting major city centers to key suburbs or airports. LA to Orange County, Manhattan out to key commuter hubs. That's where the initial high-value demand is. And hitting 10,000 feet, that shows it can operate comfortably within the existing air traffic system, handle different altitudes, different weather. It shows robustness.
You're also still doing CTOLA flights, that's conventional takeoff and landing, like a normal plane after finishing the VTOL, the vertical part earlier. And they made a big deal about showing how quiet it was at an air show. Public perception matters hugely here.
Oh, absolutely. Noise is probably the biggest potential roadblock for community acceptance. You have to be quiet. But all this flight testing, it's building towards the big one, Type Inspection Authorization, TIA. They stated they're actively preparing for TIA testing with the FAA. That's phase 4, the final phase of certification. Getting TIA basically means the FAA saying, okay, we've seen enough, your design and processes look solid, let's start the final official test for sign-off. It's a massive step.
And it seems like the timing might be good, the regulatory environment. The report mentioned White House executive orders pushing for air taxi deployment as early as next year.
That's a significant tailwind, yeah. There's clear top-down pressure in the U.S. to make this happen. It's being channeled through something called the eVTOL Integration Pilot Program, or EIPP. And this isn't just bureaucratic shuffling. The EIPP is specifically designed to figure out how to safely integrate these new aircraft into the current airspace and build public trust by showcasing the tech. It's a concerted effort to make air taxis seem less sci-fi and more like, well, just another way to get around.
Okay, so U.S. regulation is moving, but Archer isn't waiting. They're clearly pushing hard globally, too. Starting with the UAE. Midnight aircraft are actually there and flying now.
They are. Deployment is underway. The aircraft got delivered over the summer, and they're flying in Abu Dhabi with their local partner, Abu Dhabi Aviation. What's really notable in the UAE is the regulatory speed. The General Civil Aviation Authority there basically rolled out the red carpet, hosting Archer HQ meetings to fast-track the approvals. It signals serious government backing to be a first mover in AM globally.
Interesting. And their strategy in Asia-Pacific, APAC, looks equally ambitious, but maybe with different kinds of partners?
Yeah, the APAC approach seems focused on tapping into the scale and reputation of established airlines. The demand signals are strong across the region. Take Korea. Korean Air picked Archer as their exclusive partner. Exclusive, with potential orders for up to 100 aircraft.
And similar story in Japan, right? Partnering with Soracle, that's the Japan Airlines and Sumitomo joint venture. And they got selected by Tokyo and Osaka's governments to speed up service launches there. Huge cities.
It's fascinating seeing the different approaches. The UAE is about pure speed, using regulation as an advantage. Korea and Japan seem more about integration. Leveraging the airlines brings immediate scale, maintenance capabilities, and importantly, existing passenger trust.
Hmm.
These airlines already fly millions of people.
Right. And then there's Indonesia, too, an agreement with a group called IKN for initial deployment, possibly 50 aircraft. So it looks like a multi-pronged attack. Speed in the Middle East, scale and integration in Asia. Hashtag tag outro. Okay, so let's try and synthesize this for you, the listener. What we've seen here is a company shifting gears, right? From just designing a cool vehicle to actually building the entire system needed to operate it. They've secured a ton of capital, locked down key IP, made a massive bet on controlling prime real estate in a major market like LA, and they're pushing deployment globally.
Yeah, if you connect the dots, that $126 million for Hawthorne Airport, it's not just buying landing rights. It's about securing a critical choke point in one of the world's busiest, most valuable cities, controlling that physical spot, controlling the operational data from that AI testbed they're building. Ultimately, controlling the flow of traffic. It's almost like they're positioning themselves as infrastructure company first that also happens to make the vehicles.
Which leaves us with a really interesting question to ponder as this whole AAM race heats up
Yep.
for you listening. In this incredibly high stakes game, what ultimately proves more valuable? Is it being the first company to get your aircraft certified? Or is it controlling the physical airports and the digital systems that manage all the traffic in the air and on the ground? Something to think about.